Let's walk through the inherited property capital gains calculator. When you sell a house you inherited, the tax does not start from what the deceased paid for it. It starts from the property's tax value on the date of death. First, the price the whole property is being sold for. Let's enter 200,000 euros. Next, the property's tax value on the date of death. This is the acquisition value the law requires, and you find it on the Caderneta pre-dial. We'll use 80,000 euros. Then the year of death, because that is your acquisition date, not the date of the partition. Let's say 2010. Now your share. Two siblings inheriting equally means 50% each. The purchase and sale costs you actually paid, such as the estate agent's commission, the energy certificate, and the inheritance paperwork. We'll enter 5,000 euros. Any improvement works from the last 12 years, backed by invoices. We'll leave this at 0. And finally, your marginal income tax rate, because the taxable half is added to your other income. Let's use 34.9%. Instantly, the calculator shows the income tax due and the gain itself. The tax value is lifted by the inflation coefficient for the year of death, and only half of the gain is taxed. The breakdown below shows every step. Your share of the sale, your share of the acquisition value, the corrected figure, the gain, the taxable half, and what is left after tax. That's it. One thing worth knowing. If the death happened before 1989, the gain falls outside income tax entirely. Try it yourself at Calculadora Capital.